The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the grain markets were looking to follow through a part of Tuesday's session, at least the early morning session, that is, but then we kind of faded as we got into the close in the grain trade, while the livestock trade, both cattle and hogs, found some good support to close out Tuesday's session. So what are we looking at in these markets? Things have been pretty tough as of late, especially in the grain trade. Let's talk about it. Let's put some perspective on things. Joining us now for a conversation, we welcome back Matt Bennett with agmarket.net here to the show. And Matt, thank you for joining us and appreciate the time, my friend. How are you?
Well, I'm doing good. Just we've got 4-H fair this week, so kind of juggling just a little bit. But I've got a 12-year-old showing a couple of calves tomorrow, so not quite as busy today as what we're going to be tomorrow. But it's always one of those weeks that the kids really look forward to, and the parents really look forward to it being over with. So
you gotta love summer fair season with 4-H
yeah.
and FFA events, et cetera, et cetera. I remember those. It's that's always that's a highlight. That's the event of the summer, whether it be in the county or the town or the state fairs too. I mean, it's always a fun event, isn't it, Matt?
Oh, absolutely, it is, and kids get a lot of opportunities to learn, to make friends, hang out with other kids that are doing some of the same things in life they're doing, and just have some good old fashioned fun. Quite frankly, I enjoy it for our kids. It's a long day. Each day the fair is a long day, especially when you have cattle, because we usually go tie out whenever it gets later in the evening, and so typically we get over there at 6:30, and you don't get home till 10 o'clock at night. So it's kind of a late night each night. Not to mention someone's got to figure out a time to go home and do regular chores. So kind of a busy week for us.
Yeah, I hear that. Well, as much as you enjoy this week with fair season going on, I'm sure, like many of us, you haven't really enjoyed the look of these grain markets as of late, Matt. This has been a tough environment, and I've been struggling at times on the show to figure out what to talk about, because I know it's just been depressing for a lot of farmers to take a look at this grain market. We got some life Monday, but we didn't really hold the follow through on Tuesday. What's your assessment of that? Did we see some farmers selling on that short rally we've gotten to start the week?
I definitely think you broke a few bushels loose, first of all. As you suggested before we came on the air, you got to think about the noon weather maps, which they don't all agree. There's a lot of maps that are showing, for instance, that the central part of the Midwest and the eastern Corn Belt is going to look pretty darn good from a precipitation standpoint. The whole Corn Belt's going to have some elevated temperatures here over the next 2 weeks. The Western Corn Belt looks like they may miss out on some precip. Obviously, they had a lot earlier, but we all know, that if you get that kind of rainfall earlier in the year, you kind of need follow-up rain, especially whenever you get into late July and August. So, yes, you do have the potential for a pretty big crop here in the U.S., but at the same time, you got to finish well. And so I think the forecast coming into this week, of course, showing a little more inclement conditions. That's what got everyone fired up there on Monday, and I just don't know that you've been able to maintain the enthusiasm quite as much as what we were hoping. We didn't lose ground necessarily here on Tuesday, but by all means, we closed a nickel off the highs, and it makes me think there's a fair amount of cash moving.
Well, I want to get your thoughts on this. I've kind of been pondering this thought here the last few days, and so I'll ask you. And maybe I'm oversimplifying this a little bit, but it feels like as of late, you've had speculators, funds that have been at or near record short. Then on the other side, you got commercials who are, kind of hand to mouth looking for product as they need it. And then you got farmers kind of caught in the middle. And it just feels like it's this big game of chicken right now in these markets. What do you think about that, Matt?
Essentially, Jesse, whenever you see such a massive short position, a lot of times when you build, a short or long position quickly, the following week, you kind of go the other direction. People say, wow, they built that short or that long too quickly. And people get spooked, say, well, there's too much going on right now. Maybe we need to head back the other direction as far as these markets are concerned. Funds have seemed pretty committed to this position, though, Jesse. You go back to that July WASDE. That was a huge mess. I mean, July WASDE, we missed new crop stocks by over 200 million bushels, and the market's up 5 cents. And then you follow that up the following Monday with an 11-cent loss. I mean, clearly the funds are married to their position, is the way it appears to me. Was there some profit taking maybe here on Monday? Yeah, I think there probably some profit taking. When you're looking at a record short over the course of the last 2 weeks, you've got to expect that there will be times if people get spooked, you see some profit taking, because quite frankly, on the way lower, a lot of these folks have made a ton of money. So if they decide they're going to take profits and then we'll kind of wait and see how the dust settles, so to speak, this week, I think that they'll probably re-enter those short positions, if the forecast doesn't look too ominous. So, yeah, it's just one of those things, Jess. There's a lot of give and take in anything whenever it comes to the markets. But this year in particular, it hadn't been a whole lot of fun here over the last 3 weeks. I think our only hope to stabilize and maybe have more days like we had on Monday, you're either going to need some demand news none of us knows about as we speak, or you're going to have weather. Last thing I'll say, hey, Unknown bought corn this morning. And I've been kind of calling for Chinese maybe to buy some corn, whether it be off the U.S. or Brazil. They're not having the best weather this summer as far as their crops are concerned. Who knows? If Unknown's China, I think there could be more to come. So maybe, Jesse, just maybe, some of that 10-cent move yesterday was some people catching wind that maybe China had bought some corn. Because, hey, whenever they buy corn, they don't announce it the minute that they buy corn. We find out later, which is very frustrating.
Yeah, it is extremely frustrating. And I'm glad you brought that up. This demand picture has just been tough, and especially China. I mean, to that point, there's been some talk about the Chinese economy and some concern there, but also just, at what price level do U.S. prices have to get to stir up some Chinese demand? Because a lot of folks think that China is going to have to come to the U.S. for some of their needs, even though they're largely tied to Brazil and Argentina at this point. But then, what other options do we have for, grain out of the U.S.? Mexico, of course, a big corn buyer, for instance, things like that. But just this demand picture has just not been friendly here in recent months.
Right. I mean, Russia and Ukraine are not having great weather, quite frankly. And so, you could pick up, possibly some of that demand there. Clearly, they export a lot of wheat and a lot of corn out on the world market. There's a chance you maybe pick up some of that there. But, Jesse, I'll tell you what, the thing that's been most on my mind as we continue to see Brazil plan to plant more beans for the 19th straight year, and they're talking about a bigger corn crop this next year. We really need policy in Washington, so to speak, to be pro renewable fuels. If we don't get that, I think this downturn in the ag economy might have some staying power, quite frankly. It does concern me on a big picture level. Some folks are talking 170 million ton crop out of Brazil. What does that mean? Well, that means, according to USDA, which they're not predicting that right now, but over the course of 2 marketing years, the USDA is saying world stocks are going to go from 100 million tons to 128. So you take stocks up over the course of 2 marketing years, 28%. What does that do for price action? And so I don't know, Jesse. We have to be more self-sufficient here in the U.S., in my opinion. And if we are going to make a push for renewables and sustainable, the ethanol that's used to make sustainable right here in the U.S., in my opinion, shouldn't be ethanol from somewhere else in the world. It should be grown right here. And I hope that we can get Washington to go along with that, because it would make a big difference as far as stabilizing or keeping the farm economy stable through this tough time that we've entered.
Well, and you're a farmer. I mean, some perspective from you there. I know with sustainable aviation fuel in particular, that first round of stuff, that 40B tax credit, wasn't really helpful to farmers. There was a lot of disqualifying things in that. We want to see some of those incentives and some of those requirements changed for this 45Z that's upcoming, but we haven't got that guidance yet. So, I mean, to that point, what would be the best thing to see here from this 45Z tax credit for sustainable aviation fuel from the farmer perspective? Is it just something that's more inclusive, I guess, to say?
Yeah, I mean, in my opinion, it would have to be a little more inclusive. I mean, I'm all for sustainable farming practices, but what works for one farm, in Southern Illinois doesn't necessarily work for the same farm in Central Iowa, and so, I've had folks tell me that if we had to follow exactly what their projecting that we need to do to qualify, it's going to cost me more to do that than what I'm going to make off of the additional premium I get for my corn that's going to be used for sustainable. So here's the thing, Jesse, we've got to be cognizant of that. We got to understand that these farms aren't all made the same soil type. They don't all have the same drainage type, organic matter, you name it. They're all different. And so we've got to understand that maybe what's the best for something may not be the best for everything. So, we just need a little more, a little more intelligent take on how we're going to approach this. I appreciate the effort, but at the same time, I just don't think that it was, I don't think it made enough sense to me. You're just not going to have enough people adopt it that it will make a sizable difference.
We're talking with Matt Bennett from agmarket.net here today on Market Talk. And Matt, you brought up the overall ag economy, and with the way these markets have been, I guess I'll throw this at you. Are some folks kind of entering that do what you gotta do kind of mode here to, work through this down cycle, market what they have to make sure they protect the bottom line, that kind of thing? I mean, what's your take on just that overall picture and how marketing's playing into this thing right now?
Yeah, I mean, essentially, I think that diversification is going to be an absolute must, in my opinion. Now, that can be diversification on income sources on the farm that you're doing from agricultural standpoint, or how can you diversify your income as a family farm? Maybe someone has to work off the farm in some capacity to get health insurance. Maybe someone's doing that just to bridge the gap. Maybe you've got more than one person working off the farm. So, the bottom line is that we've got to understand that the income levels for 24 on a net basis, net income levels are probably going to be worse than 23, and maybe by a fair margin in a lot of places. It's very frustrating given how much we put into this crop. And if you look at fertilizer prices for 2025 right now, if you take those versus this DC25 corn in the mid 450s, I'll tell you what, that doesn't work either. It just doesn't work. I mean, you've got to be planning on well above APH type yields just to be able to hit some sort of a break even level. So yeah, I tell you what, I think people are starting to understand they got to batten down the hatches. You can see what's going on in the equipment market. It tells you that people have decided I don't need that piece of equipment as bad as what I may have thought I needed it a year ago, for instance. And so used equipment is just absolutely taking it on the chin. And it's just due to the fact that people are saying, hey, I can't spend the money right now. Maybe I can't finance things right now. I don't want to pay 9%. But if I do have some cash sitting around to buy that new paint, some people, I believe, are saying, I'm going to have to pigeonhole that cash because I'm afraid I might need it later.
Yeah. Well, and to that point as well, and not just the used equipment market, but manufacturers in general, we've seen the layoffs from John Deere and rumors that there might be more out there as well. So, I mean, that overall picture on the ag industry side and more, I think we can tell that it's one of those time periods, that things go up and things go down, and that's kind of what we're seeing right now. So, thinking about this, moving forward and kind of putting a bow on the grain markets anyway. You mentioned we got to see a weather thing here or something on the demand side. Something's got to give. So, what's the best thing you could tell folks in terms of their grain marketing right now as we move forward here through the rest of the summer? What do they need to really think about and keep in perspective, Matt?
Well, there's one thing for sure, Jesse. I think overall, there's a lot of old corn still unpriced, and so there's been some hesitancy. Hey, what happens if I sell corn? And guess what? There's guys that probably gave up last Friday and they came in here Monday and saw the corn market up 10 cents. They said, see, I knew that was going to happen, right? I knew the market would go up as soon as I sold corn. I understand that frustration, but Jesse, here's the thing. If you've got a bunch of old corn that's unpriced, probably a pretty good chance you haven't sold much new corn as well. And I think that that's, a pretty poorly kept secret that the farmer hadn't sold much new crop corn. If you get out of the old corn, you're still long. You're long what's in the field. You're long what you're growing for 24. You got to understand that as a producer, you're always long in some capacity. And so let's put our focus maybe on just one crop here and start to scale out of this old crop. Some of these basis levels are still pretty decent, quite frankly, especially whenever you get in the West. And so don't be afraid to call up your grain buyer and say, hey, you know what? if you'd push me a nickel or push me a dime, I'd sell you whatever. For quantity, I think that they'll do those types of pushes. At least I've heard a lot of them that are doing that. So don't underestimate it. Never hurts to ask. Worst they can say is no, but I'd certainly shop your corn around just a little bit and have a game plan to be out of it, because within the next 3 to 4 weeks, if you're not out of it, I'll tell you what, this basis could plummet because they know crop's coming to town.
Very true. And I think it comes down to if you got a good relationship with one of your end users, that's a good point to maybe explore that. On the flip side, livestock, especially the cattle market, has remained pretty solid here. A really good up day across the board Tuesday in cattle and hogs. Hogs have found some technical support here as of late, really, the last week or so. When you look at the protein sector, what's the big thing for you you're keeping an eye on right now, Matt?
I think a couple of things kind of come to mind. I think with cattle, you had a really good cattle on feed report on Friday. I mean, it wasn't super, super bullish, but certainly placements were low. You had to think placements would be low. I think they'll be low the next 3 or 4 months. Why? Because last year at this time, placements were high, which means the next year, it's a percentage of the previous year is what those numbers are. And so you're probably going to see some fairly low numbers. Well, when it gets right down to it, I've got to think that maybe you're going to get at some point some convergence with the cash market and what you're seeing on front month futures. What front month futures, what do we got? 186. So, 186, whereas I still know guys getting 198, 199 for fats. $2, you're hearing it here and there. You kind of need that market to get a little truer, in my opinion, a little more converged than what it is currently. But Jesse, here's the thing. Mid to high 180s to me is a place we've got to protect. I'm not saying that I'm bearish, but I'll tell you what, if we fail with some of this new information, whether it's this month or next month, if you would fail with good bullish information, you got to be super cautious. I mean, ultimately, Jesse, I learned back in college a long time, I've witnessed it in my career. When the price of corn plummets, eventually it works into cattle prices as well. Okay. And so right now it's fun to feed cheap corn and sell cattle where they're at. But I've got to think within a year, if this corn market does not turn around, you're probably going to see cattle get hit on the chin pretty hard. And so I'm a little concerned about it. I think hedging makes a heck of a lot of sense. Locking in a worst case scenario, some sort of a floor, I think is a must. Let the upside run. I mean, maybe you'll get lucky and get a rally.
Well, and to that point, I think about this. I mentioned it's kind of like a big game of chicken and the grains. Well, you don't want to play chicken with this cattle market either, to your point. And don't be afraid to use some of those tools in the toolbox, because you're exactly right. This thing could fall out from under us at any given point in time here, Matt. So you got to be smart about it, right?
No, absolutely. You got to be smart about it. The thing about it, it's pretty tough whenever the market's going up to be thinking risk management. What you want to do, what your mind tries to make you do, is get bullish. And so you get bullish because prices are going up. Whatever's driving them up is going to continue driving them up. That's not what we need to be doing. I think, especially after seeing, for instance, at the end of the calendar year this last year, and then again in the spring, pretty steep sell-offs, in this cattle market. We got to understand that whenever you get up to some of these areas and getting kind of salty up here, might not be the wisest thing to do to snub our nose at, again, mid 180s, mid to high 180s.
Yeah, good thoughts. Anything in the hogs? I know, of course, that market's become so vertically integrated, but at least we found some demand, it feels like, here. And at least technically, we've seen some rally in the last 2 weeks. I mean, that's got to be helpful for anyone in the hog market right now, right?
I would think so. Yeah. I mean, the hog market seems like it's got a pulse finally. 2 weeks ago, you just didn't know if it was ever going to quit going down.
No.
It's just, you couldn't see the light of day for nothing. And so finally got a little bit of an uptrend established. I don't expect us to march to like triple digit hogs anytime soon. But at the same time, I think that this hog market's finally found some life, and maybe you are able to keep this going for a little bit. One thing that will concern me to where we could maybe go down and even break further is if we do end up running out of steam with cattle. I think at some point you got to understand cattle prices, if they weren't in the mid to high 180s, I think hog prices would be worse yet than what they're at. I'm not saying they run hand in hand. I just think there's been some spillover buying that's going over to the hogs. So I don't know. I'm not real friendly hogs long term, but I do think that if they continue this little trend, it'll at least give you a little bit better situation of what we were looking at again 2 weeks ago. Because golly, just an absolute bloodbath.
Yeah, not fun. Not fun. Matt, I always enjoy the conversations I have with you. And I know you guys have a great team and a lot of analysis and more that folks can take a look at online, for instance, et cetera, et cetera. What's the best way for folks to reach out to you and the team there at agmarket.net?
Yep, you said it, agmarket.net. We got all kinds of stuff there, resources, being able to check in with our individuals that work for us, and then some of the technology as well. The research is fantastic. So agmarket.net is a good place to go.
Matt Bennett, thanks for joining us here on Market Talk today. Have fun at the fair, and we'll talk to you again soon.
Absolutely, bud. You as well.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.